Good afternoon, everybody, and welcome once again to Thank Furlough. It's Friday. It's Friday, the 5th of March. I'm a year and a day older. Don't feel it. Feel at least 2 or 3 years older, but never mind. We can't complain. We are at least here. I'm complete with one jab. The other arm going to go back in another month, but that's great. We're all done. I'm very pleased to say, as always, I have the inimitable Jacquie Mount with me here today.
Hi everyone.
Actually, I think it's more me with her, but anyway, she's with me. We've also got an interloper today, a guest, Graham Hambly, who is the editor of PQ magazine, which is Part Qualified magazine, which is a magazine which predominantly covers people who are part qualified on their way through to becoming accountants, a lot of whom will actually stay as part qualified and then come over to us, which is why we have quite a lot to do with PQ magazine. We get a lot of people who then train up to become bookkeepers. So that's fantastic. He'll be joining in later. Now, I know we've got a lot to cover today. Jacquie has got loads and loads of slides because obviously the Chancellor got to his feet. I, like many, wondered where on earth he'd bought his suit from or who he'd borrowed it from, because it didn't seem to fit, to my mind. But perhaps we're not paying him very well at the moment, and they're being a bit careful. So, Jacquie, all in all, I think one of the most positive budget feedbacks I've ever seen. There didn't seem to be much moaning and groaning, really. Whether or not it's because everything's been put off for a couple of years until it really hits us or what, I don't know. But what did you take from it that was of interest to us?
Well, obviously all the extensions and everything, and the bit I picked up, the negative feedback I picked up really was the long-term looking at the strategy of everything rather than the short-term, let's get through it and let's sort out how we're going to pay for it slightly later. But there are other things that need to be looked at long-term for long-term funding and things. But at the moment, as far as our members are concerned, obviously it's the what's going to happen over the next 6 months that's going to affect our members and what they do for work. So what I've done today is I have a load of slides, but I'm not going to spend too long on them because you can see the copies of the slides, you can rewatch this, so you can sort of sit and look at it and take it in at your leisure. And all I've done is I've taken what's come out in all the newspapers and what Graham and I have both had from our respective HMRC groups with summaries. And I've been through all the HMRC emails that have come through. As you can imagine, as Graham has, I've had loads this week from absolutely everybody saying the same thing in about 6 different ways. So what I've tried to do is I've tried to summarize it all, put them in various headings. You can go back and you can look at it at your leisure and just pick out the bits that you want from a single source. So that's what I've been doing. So does that ring true, Graham, that you've got loads of emails and things?
Yes, I did. Yeah, lots of all the professional bodies provided me with lots of information, and then you had the typical Deloitte's and KPMG's giving little snippets. They've tried to break things down a little bit more. But I mean, for me, the big headline news obviously was corporation tax. Yeah, I think that's going to have quite big repercussions. I think more than people expect. It would if the Labour Party had introduced it, all hell would have broken loose. It's from 19%. It's quite a big jump, 19% to 25%. And I know you've got the Germans and the French, and they're on 32%, but it still makes us very vulnerable to companies who are going to look for the UK, particularly as we've got Brexit here now. I was going to say coming up. It's here. It means that we've got to look at ourselves, how we're going to position ourselves post Brexit and moving forward for business. And I think that's quite a big jump. And some people are worried about when companies are looking at where they're going to put the HQ or where they're going to shift their profits. Then a lot of it, people may even make a decision not coming here anymore.
Yeah, so, absolutely.
Well, we'll see. Anyway, so Jacquie, if you will cover the first bit.
Let me share that. I mean, I have got corporation tax in there, so we can maybe have another look at that. And it's not coming in immediately, and there is a sliding table, but I have got those figures for you. So let's go through what we've got now. Let me share my screen. When it decides it wants to work, share my screen. So I need to go into here. Oh, everything's very slow today. Right, so let's have a look at what's gone through, starting with the imminent bits, and this is the Coronavirus Job Retention Scheme, CJRS. And what I've done is I've gone through everything and I've gone right the way back to the eligibility status because, as you know, it was due to finish very soon, and now it's all been extended for 6 months and the rules and regulations have changed. What I have to say is there's nothing new here, because everything that looks as though we've got to do the calculations are what we did back in the summer anyway. So the figures, he's brought the figures forward from that we were working with last summer through, but there are some changes and he's extended the eligibility of it. So let's just have a quick look and go through this. So extended till the 30th of September, so we've got an extra 6 months. Now there are 2 relevant dates you need to watch out for. The first is the one that we're currently using at the moment, which is the 30th of October. Now that date is the one that determines the furlough reclaim up to the end of March, from the 1st of November to the 31st of March. Remember that you had to have had an RTI done by the 30th of September. Now the 2nd of March is the new relevant date you've got to look at. Now, if you think about it, that was the day before the budget. So what happened was when the Chancellor announced the budget in the extensions, he cut off the deadline for all of those who have done an RTI by midnight the night before. So this is the effect that it's going to have. So going up to the 30th of April, we're on the existing furlough reclaim scheme. And for that, you had to have made an RTI for an individual between the 20th of March and the 30th of October. Now, if you had made a claim for furlough before the 30th of October, then you're eligible to claim for furlough for them now. But obviously, if they started from the 31st of October, or if they started the week before and you hadn't done an RTI claim, you haven't been able to claim furlough for them up to now. Now you can start to bring that tranche of people in, because from the 1st of May, so we've got what, March and April, so we've got 2 months, just under 2 months to go. The new relevant date of the 2nd of March kicks in. So if you have submitted an RTI by the 2nd of March, which was Tuesday, anybody who has started since October, you can now claim for, providing that the RTI had gone in on or before the 2nd of March. So that brings in any new employees that you may have taken on. Now, I don't know how many people have taken on employees if they're in a furlough system. I don't know, but it does allow those who came in from, say, the 1st of November to be furloughed and for you to claim furlough for them now. Those dates may or may not work, but you can see you've got some dates to work to. Now, again, with the new furlough period starting on the 1st of May, you don't have to have claimed furlough for them before, they just have to fulfill the eligibility criteria. Okay. Now, I've been getting quite a lot of questions about TUPE arrangements. I've just summarised it there, because when I went through this and looked at the dates, those dates for the TUPE transfers are exactly the same as the other 2 dates there, the 30th of October and the 2nd of March. So I'm not going into that today, but I know some of you have had queries on this, where businesses are being taken over or staff are being transferred. So if you've got an individual question on that, just come back to me individually and we can talk about that, because I know there's only 1 or 2 of you. Right, okay, now what can you claim? Now, right up till the 30th of September, all employees for their furloughed hours, and don't forget we're still on flexible furlough, so this covers furloughed hours only, must be paid 80% of that relevant hourly rate or the monthly rate or whatever. Now that's what they're going to get paid. Now this is very similar to what happened in July, August and September last year. Now this is what the employees can claim back. Up to the end of June, you can claim the existing 80% for the furloughed hours to a maximum of £2,500 a month. So if they're on full furlough, the 2,500 kicks in. If they're working part-time, you claim for the furloughed hours only, and you can claim at 80%. So up until the end of June, you're claiming back everything you're paying out, unless you're topping their wages up. Of course, don't forget NI and pensions you have to pay anyway. Now, from July, the taper starts to kick in. So this is the same as we were last summer. You have to pay the employees 80%, but you can only claim 70% back for their furloughed hours. So the employer is contributing the extra 10%. So the maximum claim that you can make for an employee in a month is £2,187.50. And you as the employer, or your clients as the employer, are going to contribute up to £312.50. So that's the extra 10% of the 80% of the relevant wage, capped at the 2,500. Nothing new. We've been here. We've been through this in detail before. And then for August and September, that percentage that you can reclaim drops to 60%. So your maximum monthly claim is 1875, exactly the same as it was in August last year, I think. And your employer is contributing up to £625. And don't forget that worked hours spent on training has to be paid at 100%. And of course, your employees must still continue paying all employers' national insurance and pension contributions, which of course cannot be reclaimed. So this is the taper on the furlough scheme that's beginning to tail off from the 1st of July. Now, hopefully, if the businesses start to open up again and lockdown becomes the thing of the past, what the Chancellor has done is he's introduced the taper because not everybody is going to be back full-time, he figures, by then, so that there is this allowance in there to keep furloughing people part-time or full-time, but hopefully part-time if they need to. Now, I'm not going to linger on these, they're the obvious ones. These are the new claim dates that go right up to the end of September. You'll see the submission date for each month is either the 14th or the 15th of the following month, depending on that. Now, late claims and everything like that, we still have that deadline date in there for claiming for late claims if you have a reasonable excuse for not having put your claim in by the date. That deadline date is still there. So that I think it goes on to the 28th of the month, but you'd have to contact HMRC for that. And don't forget, the over and under claims are still valid. If you've made an overclaim, you've got to go back in and repay it back the next month. And of course, don't forget that HMRC are still issuing that list of what every employer is claiming each month. And fairly soon, we're going to have January's adding onto that. I went through the spreadsheet with you last week. So that's still happening. And these figures will still be issued in bands of 10, 15, 20,000 pounds, whatever the employer is claiming back for furlough each month. And you can check that on the website, you download the spreadsheet. Right, so that was everything really on CJRS, just summarised very briefly. We're now into SEISS number 4. So let's have a look at that, because this is the one that's already been announced. So this is going to be open from the middle of April, and this covers, I think, February, March and April, or is it March, April, May, I can't remember, but it covers a period of 3 months, and it's the 4th of the grants. So the 3rd grant closed in January. They're going to be opening it up from mid-April. Now that, I think, has been slightly delayed from the original date, and the reason it's been delayed is that HMRC are now including the self-assessment tax returns from the 1920 tax year. Now, grants 1 to 3 were based on everything up to the 1819 tax year. And there was an extension made to the submission for that 1819 tax year, where they would extend it and bring that in. But now it's been extended, but only where the tax returns have been made by the 2nd of March. Again, midnight on the Tuesday before the budget was announced. So there's been no extension of that date. And I don't think there will be an extension of this. So if you have made a claim, or your clients have made a claim on their self-assessment return, which was due in on the 31st of January, but is now gone in by the 2nd of March, that will be included in the average count back for the last 3 years of profits. Now, this means that a lot of people who weren't eligible to claim grants 1 to 3 because they'd either started work too late, they'd become self-employed too late, or they hadn't done their self-assessment returns, they reckon it's going to bring another £600,000 into grant number 4 from what was issued originally. But it also means that because they're now
individuals.
Sorry?
600,000 individuals.
Individuals, yes, into the scheme.
A pound.
No, can bring, sorry, individuals into the scheme. Yeah. Now, this means that because they're changing the period over which they're averaging the annual profits, it doesn't mean your grants could be higher or lower, because if you think about it, if you've got a business that was starting up, then your income in the first 3 years up to 1819 might have been increasing. Perhaps then 1920 may not have been as good, or it may have been better. So you've got an extra year coming in there. So they've shunted everything forward. If you haven't got 3 years trading, they'll average it over the period that you have got. So again, we're not quite sure what it's going to get yet. It still has to be less than £50,000 of profits, and that is still going to be capped at 7,500 at 80%. Now that's already been announced. It was announced back in the summer, but what wasn't announced in the summer was the movement of the profits to include the 1920 tax year, and we did sort of talk about this before. Now the claim closes on the 31st of May, so you're only going to have a period of about 5 or 6 weeks to get these claims in. So you are going to have to be ready for that. Remember, as agents, we can't do that. It has to be the individual that does it. So therefore, you're going to have to make sure that if you've got clients in this situation, they are aware of it. Now, HMRC should be writing to everybody, but I do know of a couple of sole traders who have not been contacted by HMRC by letter to say you're entitled to claim. And I know they were entitled to claim and they made a claim, but they weren't actually notified. So do watch out for your clients that might be in this situation. Now, here's an interesting comment. We're all aware of what you have to make as a declaration. The wording on the HMRC website says, must make an honest assessment that there has been a significant reduction in trading profits due to reduced demand due to inability to trade. Now, remember SEISS 1 and 2 allowed for an increase in costs for PPE equipment to reduce trading profits, but SEISS 3 and SEISS 4 are on reduced income only. So your profits have to be reduced because your income has gone down, not because your expenses have gone up. And also the comment that you are continuing to trade in 2021. So up till now, you've been trading for the year. And that's the declaration that they're going to have to make. So what came out in the budget was SEISS number 5. This is the 5th and final grant, and it's going to cover the period May to September. Now, as the furlough is being tailed off by the percentages, so is the SEISS grant, because this actually covers May to September. So it's not just for 3 months, it's one final grant. And the amount that's going to be paid is still determined as before on assessable profits. The dates have been extended. So again, if you didn't get grants 1 to 3, you can claim grants 4 and 5, possibly if you're eligible. So there are the new businesses coming in here. But this is the interesting bit, and this is the taper. The maximum grant that they're giving is 80% of taxable profits, capped at £7,500. Now, we did this calculation. That's the £50,000 minus 12,500, which is the personal allowance, and then 80% of that over 3 months gives you the £7,500. That's where that figure comes from. But it's only for those who can prove that their turnover has been reduced by 30% or more. Now, what I can't see from that is over what period they're going to look at the reduction. Is it between 1819 and 1920? Is it a percentage reduction from the start of the 3-year period to the end of the 3-year period? That I don't yet know. So unless Graham's picked something up, I haven't actually read anything on that yet. So I don't think we're going to be able to answer any questions on that. Now, if your turnover has reduced but by less than 30%, then your grant is going to be only 30% of 3 months of average profit. Now, if you work out the figures, that caps at £2,850 as the maximum grant that's going to be given out under SEISS 5. So that's quite a big reduction if you haven't had a 30% reduction in profits. Now, obviously, if the businesses, that goes back to up till March 2020, which is when this whole thing kicked in. So unless your profits were badly affected before March 2020, I think a lot of people are going to be only getting the 30% grant. So you're going to need to sit down, look at your clients, look at the income, look at the average, look at the reductions and see what's going, what they might get. I think we're going to find it's going to be a lot less than they've been used to or they were hoping for the 5th grant. So that one might come back to bite us, I think, at some stage. So quickly, how do you claim? Nothing new here. To make the claim, these are the bits of information you need to provide. So as you log on to your government gateway, obviously you need your bank details, national insurance number, all that sort of thing to prove who you are. And a reminder, though, that as there are new claimants coming in, those new claimants are going to have to provide a lot more information. And that's a list of some of the evidence that they could be asked to provide. Now, that's ID stuff, okay, driving license, tax credits. Now, the reason the 3 most recent pay slips is in there is because don't forget the SEISS. To get the SEISS, your profits must be at least 50% of your income. So if you're looking at someone who is self-employed and employed, that's why for someone new, they want to look at your pay slips to prove what you've been earning and to check this 50%. So I think that's why that's in there. Now, again, if you're not eligible, this is the these are the people who are not going to be eligible. For new businesses who haven't submitted a tax return for 1920. Now, if you have submitted tax returns before and you haven't submitted your 1920 tax return, I don't know whether that cuts you out completely or whether they'll take it over the previous years, but it definitely says you're excluded if you haven't made a tax return for 1920. So I need to look into that a little bit further to see exactly, to unwrap that one. Now, company directors taking their income as dividends, still not included. There's been no help for those whatsoever. Now, we've had this discussion for almost a year now. Garry and I have knocked this around with you all as to why this happened, and we all know the reasons for that. Those who earned more than 50,000, remember there wasn't a taper on this. The grant didn't stop once your profits went over 50,000. If you had average profits of £50,001, you didn't get a penny. Those who earned less than half of their income from self-employment, and it's estimated that there are still 2.4 million individuals who've been excluded from this because of the way they've been paid or the amounts they've been paid. So there are all the additional lists of things that they can claim or they can apply for claim, bounce back loans, that sort of thing is closing, I know, shortly, but there's the various universal credits, mortgage holidays, business support grants, that sort of thing. Announcement, the universal credit payments, which I think is also available to anyone on working tax credits, but I'm not sure if anyone in that situation has moved over to universal credits yet. The £20 a week has been extended to the end of September, but it's going to be paid in a single £500 lump sum, I think, rather than the £20 a week. So for those of you who know someone who's been claiming that, you will probably understand better than I do exactly how that's going to work. So tax credit extension to the end of September as well. Okay. Those were the new announcements as far as the coronavirus grants are concerned. Let's just have a quick look at VAT deferral. Now, this is the deferral from the end of, for the March to June VAT repayments. Again, remember we spoke last week, the portal is open, so you can register. And I know there were some issues last week, but by Friday, a number of you had managed to, with your, well, you can't, but your clients can, go in and apply for the VAT deferral scheme. Now, we've talked about how it works. Now, you have a number of choices. Now, if you look at the HMRC stuff, it says that you can defer your payments between 2 and 11 equal instalments. Now, if you sign up by the 19th of March, you can pay 11 monthly instalments and so on down. The portal closes on the 21st of June. And if you sign up before the 21st of June, then you can pay your VAT in 8 instalments. But basically, once the portal's closed, that's it. Now, anyone on the annual VAT scheme can't at the moment register on that portal because there is a new scheme, a new portal opening up for you, which is going to come on later this month. That's literally all I've seen about it, is that those on annual VAT can join the scheme later in April. So I think they're still trying to work out how they're going to do that. And a reminder that if you have already contacted HMRC to get a deferral for that, you can't overwrite that by applying online. You're going to have to actually contact HMRC to get your payments amended. And certainly someone last week had that arrangement for a client. They then applied for the deferral and that took the whole amount, even though they paid for half of it. So if you've already paid some of the VAT off, you'll probably need to speak to HMRC just to sort out how you're going to pay that, because it's taking the whole of that deferral regardless of whether you've paid anything already. Now, this is something that I know one or two that I won't name members who have got clients in this sector, tourism, hospitality sectors. The reduced rate of 5% VAT is going to be continued until the 31st of September. Now, don't forget also, if you're on the flat rate scheme, there are other reductions as well for the flat rate scheme. Now, I haven't seen anything about flat rate schemes to see whether that's being deferred before Terry asks us online on a question, because I'm sure he's online listening. And Terry, I'm hoping you might be able to tell us the answer to that one. But the 5% continues until the 30th of September, and then it's going to be staggered up to 12.5% VAT through till the 31st of March 2022, when it reverts back to full 20%. Still no VAT reduction on alcohol. That's still at 20%. They haven't reduced the VAT on that. But outside that, the Chancellor announced that there's being a duty freeze on alcohol, and there was a planned duty increase on fuel due to come in. That's now been removed, and the duties on alcohol and fuel, and that's beers, wine, spirits, everything like that, has been frozen. Okay, quick one on loans and grants. Now, business bounce back loans and the coronavirus business interruption loan scheme, so B-bills and C-bills, closes on the 31st of March. Originally, that was closing on the 30th of November with decisions taken by the 31st of December. That was then extended. That now definitely closes on the 31st of March and is going to be replaced by a new recovery loan scheme, which opens on the 6th of April, and you can borrow between £1,000 and £10 million. Now, I got a bit confused when I read this because of the guarantees. And this is what I think I've now understood. The minimum amount you can borrow is 1,000 and the maximum is 10 million. So if any of our members are borrowing £10 million, I want to know you and I want to have lunch with you when we're opened up. But seriously, those are the new loan recovery schemes. And the government will back it by 80%. But it's between 25,000 and the 10 million. So as I read that, and Graham's probably looked at this and might be able to confirm this, you are going to be responsible for the first £25,000 of that loan, because the government, as I understand it, is backing it between £25,001 and the full 10 million. And that's where they're going to put the 80% guarantee in. But what I did pick up from the newspaper on one of the reports, and this is literally from a finance writer in one of the papers, that applicants may be asked to provide personal guarantees for all amounts over £250,000. Now, we did have this at the start when all these bounce back loans and the C-bills started, and it caused a bit of controversy. And that apparently is still around. Now, that is a personal guarantee. So that means that if you default on the loan, your home and your personal effects could very well be vulnerable. So do watch out for that if you're going down this route, because as you all know, if you're a fair sized business, £250,000, if you're investing in new assets and things like that, or big development schemes, that's not going to go very far. It's open to those who have already accessed existing loans. Okay, now if you think about this, there is a huge amount of loan that has been available to businesses, and at some stage it's going to have to be paid back. So we have a 6-month holiday on the existing loans. So they've been extended over to a 10-month payment. You can take a 6-month holiday starting from, I would imagine, from when the year anniversary of when you took the original loan out. If businesses are now putting these loans back on, this is a huge financial commitment for some businesses to actually take on to keep going. So it's a business decision. Now, this time, I think, I haven't seen this wording before, can be used for any legitimate business purpose, including growth and investment. But they must show that they've been affected by the pandemic and that they are a viable business. Sorry, you might not be able to see that. You're a viable business, or would be viable if not for the coronavirus outbreak. Now, how on earth it's going to be decided that the business is still viable is an area that I'm not going to go into or even discuss. But they are being asked to make almost a statement that this is what it's being used for. Because one of the biggest problems, don't forget, that's happened with these loans are that they've been taken out fraudulently. And I was talking to a member this morning that was looking at the various VAT deferrals and the loans that one of their clients has taken out and saying it's going to be a huge commitment on what to pay these back on deferred VAT. They can't afford to pay their VAT now, so they're deferring VAT yet again on a payment plan. And it's a massive, massive financial commitment. And we actually sat down and looked at the figures for a fairly small business that is being currently still owed on VAT and loan repayment. So if you start to take out yet another one, I'm just saying there's a huge amount of loan going around out there. So I think for members and clients, it's something that you are going to have to be very careful when you're looking at how you deal with this on the businesses as to whether the businesses are viable. Now, that's more Gary's area than mine, because that's to do with business viability. So I'm going to, you know, that's one for Garry to think about, but it's something that members are going to have to think about. The scheme's open until the 31st of December, so you've got some time there. Now, there are some grants going around for small businesses. There's the Help to Grow, which is a management training grant for you to be able to build your business and grow your business and want to get some management training and support there. And the government is going to contribute 90% of the cost of that. So that's quite an affordable training if you're looking at existing your business. Now, for SMEs, there's some free training and grants of up to 50% towards the cost of digital software. Starts in the autumn, register interest now. Now, I haven't actually read too much about this, so and I missed exactly what the Chancellor said on this, but it's certainly to do with the development, digital developments. Now, we know what that's all about. We've all been using Zoom for the last year, a lot of digital online stuff. And of course, if you look at things like that have been happening with the Brexit, with all the customs declarations, and a lot of people are going into more digitally based software. We've got MTD heading down the line, extension of that. We've got MTD for self-assessment. All of this is going to mean that a number of small businesses over the next year to 2 years are going to have to invest in digital software and do some training. So do look to see whether that might be some free training that's available to SMEs. It's quite a useful one to watch out for. Quick one on business rates. The 100% discount is remaining until the end of June. Now, again, we didn't know what was going to happen about this last time somebody asked. So that's going on to the end of June. And then from July, there are further rates discounts. So that's not coming in at a lump sum, because I know a number of small businesses were quite concerned about suddenly they're going to have to find a huge amount of their rates to start paying from the 1st of April. So you've got until the end of June, but from the 1st of July, the discount is no longer at 100%, but it's capped at 2/3, so 66 and 2/3 percentage. Now, if your business is open, that rate discount is going to be lower. So the 2/3 discount is going to apply to businesses which either open very late or are still building, and how it's going to work, we'll have to look into. So the more you're open, the less discount you're going to get. Now, again, in the paper this week, there's been a lot of information about the big retail companies, some of whom have paid their rates bills and didn't take the 100% discount, others of whom haven't taken them yet, but have said they won't take any more discounts after the end of April. So we'll see. And it's only applying to businesses who were forced to shut in the latest lockdown. So all those small businesses that cut, you can still take advantage of discounts. Quick one on personal tax rates and allowances. There is a very small increase in the personal allowance that's already been planned for April. It's currently £12,500. It's going up by the whopping amount of £70 on the 6th of April. But it's then going to be frozen until April 2026. And that is a UK-wide freeze, because don't forget, I'm about to talk Scotland, my favourite subject. The personal allowance is UK-wide. Now, the high rate of tax, again, this is not for Scotland. In England, Wales and Northern Ireland, the higher rate, the level of income at which the higher rate income tax, 40%, kicks in, is going up from April to £50,270. And again, it's going to be frozen then until April 2026. Now, Scotland, of course, has its own tax rates. It has 5 bands of tax. It differs on the allowances. The personal allowances, the UK-wide. I have yet to see whether Scotland have announced anything on their tax rates. They've got a few other things going on up in Scotland at the moment. I certainly haven't heard of anything. So we watch this space to see what's going to happen to income tax in Scotland. High rate tax for savings and dividends, that is UK-wide. Now, this is an interesting one that I picked up. Again, I picked this up from the paper. I didn't pick this up from the Chancellor's statement. So going around the HMRC forums and the groups in the last couple of years, this is a lot to do with MTD. And there was a consultancy paper that ICB submitted to last year on the changes to the penalty regime once the new MTD system kicks in. Now, we spoke a lot, and Graham, I think, has probably been involved in this discussion as well, about the penalties going from an automatic £100 penalty the minute you're late with a submission for anything to almost like a driving licence penalty points. So every time you're late, you clock up your penalty points. And then when you get to however many penalty points, that's when the fine kicks in. And the fine will be there, and you don't lose your points until you've made, say, 3 or 4 or 5 or however many on-time returns. Then you'll go back to 0 points. It's a bit like serving your 12-point driving licence points. After 4 years, they'll be knocked off. I haven't heard about this from HMRC for quite some time, but it was tucked into the paper that I read. So I've put it up there because I'm sure Graham and I are going to hear a lot more about this at some stage. Someone from one of our groups is going to question it. And this is the one that Graham mentioned. This is a high-con corporation tax. I forget, it's the biggest rise in corporation tax. Is it? I don't know, I can't remember how many years it goes back. I can't remember whose budget it was. But it's going up from, currently it's 90%, going up to 25%. But it's only for businesses with profits over £250,000. Now, don't forget, this is taxable profits, I think. So that's after things like your adjustments, capital allowances, and all that are taken out. So it's only really going to affect the biggest, the largest of businesses. And I can't remember how much they reckon it's going to raise, but I think if I'm right, it's only about corporation tax accounts. Is it as low as 7% of total taxation revenue in the country? So although it's a huge hike, it's a question of realistically who's going to pay now. If the bigger companies are earning lots of profits, I'm not making any comment about how much tax they should pay. But the good news is that if your profits are under £50,000, your tax rate's going to remain at 19%. That is not going to affect you. And certainly for our members and the clients that you deal with, these little smaller micro entities that you deal with, then it's unlikely to change that unless they're doing very, very well. And of course, at the moment, your profit's going to be grossly reduced because of coronavirus. You've got to include your grants in taxable income. So all these grants that you've had will include in that. But I've got a feeling a lot of businesses will still fall into that £50,000. Now, it's not going to go from one to the other, because between the £50,000 and £250,000, there's going to be a tapered sliding scale. Now, we don't know what that sliding scale is going to be. I haven't seen anything on that yet. But so up to £50,000, you'll pay 90%. Over £250,000, from April 2023, you'll pay 25%, and there'll be a sliding scale. Now, in line with that, something called diverted profits tax, which is where profits are being diverted, that's going up to 31%, so 6% above that. So not something I ever get involved in, but I found it, so I thought I'd tuck it in there. And the other one is carrying back losses. Now, losses of up to £2 million can now be carried back 3 years. Now, I think at the moment they can be carried back for 1 year, but they're going to extend that so you can carry that back for 3 years. Now, that's actually worth up to £760,000 maximum per company. Now, where did they get that figure on? If you take 2 million, you work out 90% of it, multiply it by 2 to give you over 2 years, or 2 years, that's where you get the £760,000 from, so counted back. That's the additional, because you can count back 1 year now, so the extra 2 years, work it out, 2 million times 90% times 2 comes out to be 760,000. Right, quick other taxes, these have not changed. Inheritance tax, capital gains tax, VAT registration threshold and the pensions threshold are all going to remain unchanged for the foreseeable future. The pension threshold is that lifetime allowance that you can put into a pension scheme before you start to have huge tax penalties. And at the moment, it's 1,073,100. Now, there must have been a percentage increase because the last time I looked at this, it was 1 million, but we've managed to gain an extra 73,000. So that's the maximum. So none of those are changing. The VAT threshold sits nicely at £85,000 for the foreseeable future. Little tiny one just to pick up that you can claim household, if you're working from home still, there was an allowance that we spoke about where you could claim for what cost of working from home, and if the employer pays for the expenses for you working at home, it's not tax deductible. So it's not a benefit, so you're not going to be taxed on it. And if you work from home, you can be paid a certain amount of working from home allowance. And that was due to end this year at the end of this tax year, but it's been extended for another year. So that's going on to April 22. Now, if the employer isn't paying this allowance and you as an employee are paying for these things yourself, you can actually claim this back. I think it's up to £6 a week for working from home. And you can do that by logging onto your personal tax allowance. And there's a button there for putting home expenses. You don't need to do it through the self-assessment tax return. It can be claimed, as I say. But if your employer is paying that, then that goes through free of tax and NI. You're obviously better off if the employer pays it because you'll get the full £6. If you pay it and claim it back yourself, you're only going to get the tax relief on it. So that's how that works.
Well, on that last point there, Jackie,
yeah.
Whenever decides that they're actually not going to go back to the office and it's a question of choice now, not necessity, what's going to happen to the grant then? Because it's your choice. So are you going to have to foot the bill yourself?
No, but the bill can be claimed for the whole year if you spend 1 day working at home. Because what you do is you put your claim in, I think, for the whole year. You could last year. I knew you'd come up with a difficult one, Mr. C.
Well, I'm always like that. Yeah, I'm always difficult.
Yeah, I know. I'll have to. I'll take the Fifth Amendment on that one and come back to you, Garry, if I can. I need to look into that one. Quick one on stamp duties, because of the number of property purchases that are going through at the moment. The nil rate band of up to £500,000 was due to end in March, but that's not going to happen now. They've extended it to the 30th of June. It's then going to be tapered down to £250,000 for purchases, sales and purchases completed by the end of September, and then it will return to its old £125,000 on the 1st of October. So those nil rate bands will gradually start to come down from the end of June. And don't forget, anyone who's interested, there are 5% deposits available now for mortgages, with the government putting in guarantees of 95%. Now, literally, I haven't looked into what the cost of that is and how those guarantees are going to work. I'm not too sure, but that was announced in there. The only other one I've got, I think, for you on the budget is the national minimum wage. Now, the announcement was for the national living wage. It was for the 25 and over. That's going up to £8.91. So again, those are the current rates minimum wage and the new rates from the 6th of April going up there. So I think, yes, that's my last one. So I will stop sharing my screen. A lot of information there. As I say, I have belted through it to give us, oh gosh, took a long time as well. Hopefully this could be a long session because I know we've got loads of questions coming up. So I'm going to grab a mouthful of my tea and hand over to Garry and Graham, and I'll start to have a look at the questions and see what we've got coming through, if that's all right.
Graham, hi. Yeah, thanks, Jackie. Thank you for that. Yeah, I know I always ask difficult questions, but that's just these things spring to mind. Graham, what have you got for us today? What is your angle on all of this?
Jacquie has done such a fantastic job. The Chancellor could do with you the day after. Just explain
You've got to be joking. Nah, no.
That
Gary's enough.
It's great. I mean, people always take these things from a very personal point of view. Obviously, you know, if you're just below the £50,000 threshold, then you're thinking about, you know, the headline news is, you know, these are the biggest tax increases for 50 years. And a lot of people will make a lot about that, and that's wrong, really, because I think the Chancellor's done a good job. It's his second budget, and I think there's not a lot of scope for him to do anything. Everyone's calling him a Labour Chancellor, but it has to be a sort of fiscally expansionist budget. It has to be high debt, high expenditure. We need to come out of this without too much of a recession. Okay, debt's going to be going up. It's going to be 97%.
99% of GDP, isn't it? Yeah.
By 2030. So, and he did try to explain it quite early on in his I think it's about an hour. He did try to explain how debt works. And it's quite a difficult concept. We didn't pay off World War II debt until I think the 1990s. Debt is intergenerational. So someone, unfortunately, not me and you, Garry, Jacquie will probably still be around, but we'll be picking up this.
No, Garry, Graham, you do know I'm a lot older than Garry, don't you?
No.
But it's that's how, you know, debt and economics works.
I think the problem is that with sensational headlines, you know, this jump up in corporation tax, companies worried and all the rest of it. As Jacquie pointed out, I mean, only 0.3% of the entire British business population is large. Only another, 5 or 6% of medium. Everybody else is small, so they're way out of this. You know, they've just got nothing to do with them, really. But it makes a good headline, and I think it is sometimes frightening for people. But
I could see you shake your head, Garry. I could see you shake your head when I said about companies not being. But there are the very positive things about locating in the UK, and that will still pull lots and lots of companies here. We're a very easy to operate country. You know, I still think corrupt-free. You know, so those are positive things with easy access to money, easy access even still to Europe and everything else, and the markets. And I think we will still be a place that people want to come and put their businesses.
Yeah, I think so. But also, I think the businesses will make decisions on not putting all their eggs in one basket. So the fact that Sunderland is doing really well for Nissan or something or other, it doesn't mean that Nissan are going to move everything suddenly to Sunderland. They'd be stupid to do that because they don't know what's going to happen in another 10 years' time. So they'll give them a new engine bit, but they'll go and build the wheels somewhere, and they'll go and build the rooftop somewhere else. You know, I mean, it is just business, I'm afraid. But I think the old days of companies almost giving people money, let alone tax relief, that has been cut back a lot by Europe and by other trade agreements, and obviously America's always moaning about somebody giving something away for nothing, and it is a difficult thing, isn't it? And I've said here so many times on this program, I'd hate to be in government. It's hard enough running an institute trying to run a government. But I was interested though that this time, I mean, you and Jacquie both have a strong educational background. Yours, I was everything else. They're trying to encourage people to train more staff, apprenticeships, more money again. Yep. I mean, it's an eye-watering amount that people can get for training somebody to go into apprenticeship, but they're still not being picked up. It's almost as if we're fighting the tide of a change where people are not employing apprentices anymore. It's not that the money's putting them off or anything else. It's the way the businesses are run nowadays. It's different.
I think the problem was the big answer to all of this really is about uncertainty and certainty. It's that companies couldn't take on apprentices in this last year. They didn't know where they were going to be. I've got two businesses. The idea of taking on apprentices, it would be too much to think about, doing it properly. But the grant, £3,000, doubled, and you still get another 1,000 on top of that. Yeah. If you take a 16 to 18-year-old, that's not significant. Sum. That's that's good money. And
do you think we're still going to be taking apprentices on when we know that actually this year or next year, they're going to have had their A-levels assessed rather than examined. I mean, that's going to put a lot of doubt in people's mind, I think.
Are you asking me? Sorry, I thought Jacquie
Well,
might
I
ask
know,
something.
really. I mean, Jackie's been at the sharp end of this. I mean, you've been in education, and I mean, it was strange that we had all the problems with the algorithms last year, fair enough. But what we ended up with was the biggest ever number of people passing exams. So to my mind, something isn't quite right. This year, they reckon to be even more.
But Garry, what makes a good bookkeeper? What makes a good bookkeeper? What makes a good bookkeeper is not necessarily the exams they take. It's about their practical experience. It's the experience they have. And being an apprentice, you're in the business, so you're studying. Businesses will very quickly, unfortunately, will let go apprentices who don't fit the bill. Yeah. But it will give people, the great thing about apprenticeships is it allows diversity in the workplace. It will allow companies perhaps to take a risk with someone they might not have looked at before. And I think that's a really positive thing about apprenticeship.
Can I come in as well on tutor assess work? I mean, I spent over 20 years teaching and running courses on the old BTEC national diplomas and that sort of thing, most of which are completely assessed. And we used to, we would do assessments on projects and things like that. And we would send our students out with a grade, pass, merit or distinction overall, that we knew was fair. But that was something which was continuously assessed over a period of 2 years. And every year we would come in and we would have a very formal inspection by BTEC or Edexcel, who would come in and monitor everything we did. And if our work wasn't up to scratch, we would get, a black mark against us, and all FE colleges did that. I think the problem, and this year I have one grandson who's going through supposedly year 11 doing GCSEs, and one who's doing practical vocational training in year 13. And both of those are going to have to be assessed. The biggest problem with GCSEs is not that the teachers are assessing them, it's just that they've lost so much schooling this year that, and it's going to reflect it. Either they will get really good grades, or those that would get good grades because they're good at exams and perhaps haven't done as much work as they should have done over the year because it's going to be on the exam. I think those are the ones that might be affected. So something I'm actually heavily involved in at the moment and watching very closely as to what's going to happen, because I had one that did GCSEs last year and actually did very well, because last year by the time the shutdown came, it was after the January mocks, they either got very good grades, and my granddaughter fortunately got very good grades in her mock, so she did very, very well in her teacher assessed GCSEs. But this year's year 11 have lost so much teaching. It's going to be even harder this year, I think, to do that.
I mean, education is supposed to be a great leveler. Unfortunately, in COVID times, it's quite the opposite, I think, because, poor families just don't have the facility. And let's face it, a lot of kids are being taught by people who probably aren't that clever themselves. Yeah. Sorry to be rude about it, but I mean, it's, that's not.
Well, also, I mean, Garry, it's not just
what do you know about it?
But Garry, it's not just that. It's to do with the way these kids are taught some of these things. I mean, I learned a new word a couple of years ago called chunking. Now, do you know what chunking is? You will if you've got children that are going through No, it's long division. As I understand, the new method of long division or multiplication, I think it might be is called chunking. And and they completely changed the way they teach that. And I mean, I was originally trained as a mathematician. And I look at this and think, that's a ridiculous way to teach multiplication. But that's the way they do it. So, even if you're bright, you don't know what they're doing. And certain things that I did in my maths degree are now being taught in I think about year 8, I think, when I did it in a maths degree, because it was new. It's a lot of set theory and vector analysis and that sort of thing. It's now coming in at year 8 or something. So things move on and change.
I mean, I think they do change. I remember when my son James was first at school and he was learning to read, I was teaching him phonetically because that's the way that I've been taught at her. But he had flashcards, so he could look at cat and work that one out, but bat he'd got no idea with. And now that thankfully has gone, and there are so many different changes. But I think there is a whole generation that is suffering, and you know, we've got it. They're missing the interaction, the social get together with their kids. And somebody said on television recently, it's not so much the lessons, it's the playtime, because they're not social anymore. You know, they've lost that capacity. So anyway, we'll see. So we're going to
we've got. I tell you what, we've got some lovely comments coming in. We've got one from oh, here we go. This has opened up a whole can of worms, this teaching at home.
I know.
Faye says, in New Zealand, going back to the early 1980s, we were accredited as pass to enter university. You studied to a date, pupils notified of exemption from exams, and the rest went off to do exams. Susan Bruner says, I love watching this. Light-hearted Friday afternoon. Steph says, I'm with you, Jackie. I consider myself to be above average intelligence, but have really struggled to teach my 8-year-old as it's all different. And Amit says, these new methods are bewildering. I taught my son the old methods to GCSEs this year. Yeah, I've got one doing GCSEs, or a grandson doing GCSEs this year. Anyway, okay, can we pick up on some of the technical questions? There's some questions coming in on the SEISS grant. Will the full SEISS calculation be based on the average trading profits of 3 or 4 years? I think they're going to go back 3 years, but I wouldn't like to swear on it. But whatever it is, it's the average profits, but they've included the 1920. So I'm not sure whether it's 3 or 4 years yet. And there's a couple of questions from Usha, and I think I saw one somewhere else saying, is the 25% rate of tax a marginal rate? So it's on profits over 250,000, and everything up to 250,000 will be on a sliding scale. The answer at the moment is I don't know, but we've got a bit of while to do that. I don't know whether it's marginal rate or whether it suddenly kicks in at that or not. I don't know. But these are the sort of questions which I will take away and we will try and unpick for you. The working from home tax relief, Susanna, if employees have already claimed for this in the current year via their tax account, I'm assuming they have to do it again for the following year. Yes, I think you do, but there is a chance that the claim might carry forward. You might have to cancel it. So again, look into that. We'll try and find all that. And Maggie said, Jackie, if we pay our staff the weekly allowance for home working, where do we stand if they ask for desks and chairs, etc.? Also, upgraded broadband request came up recently. Again, I think what I'm going to have to do this week, because we're already nearly at 3 o'clock, so I'm going to take all these questions away. I haven't yet updated our COVID hub with all the extensions, so I will do that, and I will try and get some answers to this in the Q&A section of the COVID hub. I'm in the process of trying to revamp it all, so it's much easier to work your way through it at the moment. So I will try and get that update. I'll probably do that over the weekend, so you've got that, say, by Monday.
Graham, while Jackie's just looking at a few more questions, just a couple to ask you, bearing in mind PQ Magazine and your main audience.
Yeah.
Obviously, I've just mentioned assessed exams. We're now looking at professional bodies providing assessed exams. So somebody can be assessed for their O-levels, or GCSEs, sorry, I'm getting old again, assessed for their A-levels, assessed for their professional qualifications. Is it all going to be down to the employer then to try and train these people up to the standard that they require? Is the poor old employer going to have to bite the bullet again?
Part of the professional qualification has always been the exams are only part of the process. For the ACCA, for example, you have to have 3 years practical experience requirements before you become a member. They see it as really important you show you've got the attributes to be an accountant. So becoming an accountant is not just about passing exams. They've also got a sort of 26-hour ethics module you have to go through as well, which is peer assessed and lots of other stuff. So the professional qualifications like the ACCA are looking for you to show your professional experience, and you have to fill out a proper form and show that you've got the experience they deem necessary before you can call yourself not anyone can call themselves an accountant, but you can call yourself a chartered certified accountant, for example. And it's the same for the ICAW. You would sign a 3-year training contract, and part of that training contract is you study for exams, and they give you lovely weeks off to do that, but also they expect you to be earning money for them while you're doing that,
which is fair enough.
Yeah.
Okay.
Jackie, anything else?
Yeah, there's a couple here. Natalie's asked, with regards to the SEISS grants, I wonder what happens to self-employed individuals with more than one business. If they have 3 different businesses, one business has been trading, but the other 2 businesses have had to stop. Now, I think we looked into this before. I think provided that they're all done as sole trader and it's not a split between corporation tax and everything else, the tax is based on all 3 businesses because you do one tax return to cover all 3 businesses. So I think it's your total income. So it depends on, I would imagine it's that. So interesting comment that I had missed. So thank you for Helen from this. The new national living wage from the 1st of April drops the age from 25 to 23. That's the bit I missed. So Helen, thank you for that. And I'll make sure that that goes onto my slides before they go up. So that living wage, whereas at the moment it's been £8.60 something, goes up to £8.91, but drops the age to 23. So I will have a look at those. Will the new minimum wage rates have any impact on the furlough claims from April? No, I don't think they will, because last year, when we went across the 6th of April, we were working on the relevant income as of the last RTI before the relevant date. So I think it's going to be the last RTI that was made before the 2nd of March that's going to determine the hourly rate that you use. So when the new rate kicks in, you're going to have to pay your furloughed hours on the old rate, I think. That's what happened last year, and I haven't heard that anything's changed. Somebody has said that they have read that the SEISS is going to be averaged over the past 3 years. So what's going to happen is it's going to kick off the first year, use the last 3 years, including the 1920, which makes sense to me that it's averaged over the last 3 years. Someone said they read that somewhere. That was you, Lena, I think. The dates of applying for those are changing as well. That you're going to be told the date you can apply for SEISS 4. I think it was like SEISS 3, so that not everybody goes on and kills the system, drops it dead on the first day. It's going to be a staggered application date for those. Associated companies and corporation tax. This is for Peter, and I haven't looked at associated companies, Peter, so I will go away and have a look at that. Amit says, will these changes be reflected in the ICB syllabus in the short term for corporation tax? That's something ICB are going to have to look at, the syllabuses, because if there is a permanent change, to be honest, with corporation tax, the important thing is not the rate of tax, it's how you get to the taxable profit. And that doesn't change. Well, it does change every year because things come in and go out. But once you get to the taxable profit, that's then split across the years at different rates. So it's just literally applying a mathematical, or your software applies the mathematical formula for you. So I think we probably say in our syllabus something like the relevant tax rate, which means that every time the tax rate changes, we don't have to change the syllabus.
That's an upside, yeah.
The exams
there are a few changes at the moment. I mean, Jackie, there are a few changes at the moment, like simplified tax and self-assessment tax.
Yes.
So,
yes.
Who can do that and who can't? And we've been asked this a lot. So we don't.
Yeah.
I've told them we don't have a definitive answer at the moment. But I don't think people are going to get away from an exam by doing simplified tax and say, well, that's not.
Well, simplified tax is where you don't actually do a self-assessment tax return, because the simplified tax is aimed at people who have a very simple format of income. So, for example, directors have always had to do a self-assessment tax return for the nature that they're directors. But simply being a director doesn't mean that your tax affairs are any complex. So they no longer have to do a tax return unless they're taking huge dividends and they have to declare the tax on that, in which case they will have to do a self-assessment tax return. Pensioners, for example, who have all of their income which is based on a tax code, now will no longer have to do self-assessment returns, because what the government, what HMRC does is it looks at all your various income under RTI, because don't forget, all this gets uploaded, all your income gets uploaded each month under RTI, and HMRC now look very quickly, the system will look as to whether the tax is correct and you're being taxed on almost on a real-time basis. And if you've suddenly got a huge increase in your salary, and that hits HMRC, I can tell you, you are going to get an amended tax code if it's going to take you up, or if it's going to change your tax code. That will come in a period of 4 weeks, 6 weeks. So it's very dynamic. Dynamic is the term that they use for that on tax codes.
Graham, can I bring you in on something else that we've been talking about here a lot, Jacquie and I? We had Bill Dodwell on from the Tax Simplification Unit, and the changes haven't happened, but they in this budget, but they have been hinted at again. I mean, how close do you think we are to a levelling off of employed and self-employed as far as tax and national insurance are concerned?
It's difficult when we have those meetings, as Jacquie talks about. HMRC does want to try and simplify things, and the tax system, it needs to be simplified. There's too many layers to it now, and overcomplication, which allow all the avoidance and all the shifting around. So I just think simple is best, and less is best. I could be in the Conservative government saying that, but it's true.
But when we get to sort of making tax digital, there's this big thing now about people are now got to be paid to have a piece of software. So software companies are rubbing their hands together in glee, obviously, and it's all going to be automatic, etc. They seem to be more interested in getting people onto the system and making sure that what goes into the system is true and accurate. And you know, bookkeepers are at the sharp end of this. They have to try and persuade their clients that this little fiddle that they read about somewhere in the Daily Mail or wherever it might be, that everybody's using, you know, this avoidance scheme or whatever. Clients are always coming to them and saying, "Oh, I've just read this. I can put this through," and they're having to say, "No, you can't." If we do away with professionals, and it's been trying to move that way for a long time. It's one of the reasons why I don't think we actually will. But if they are trying to move away, is the government just saying, do you think, well, we'd rather know about anybody and we'll take a percentage risk on this, a bit of a gamble? Or is it just, let's get them all in first, then we'll hammer down on them? Where do you think this is coming from?
I've got I have a real concern about the government and its view of agents. Sometimes I think they don't quite realise the amount of work they do for them for free almost. Well, because they don't charge the government, they charge their clients, and they do such a fantastic job of getting everyone paying the right amount of tax. And if you look at the amount of self-assessments that didn't go in, and the government allowed people that extension, yeah, I'm really going to be interested to see how many people finally get those self-assessments in, because I think we're about 1 million, Jacquie, isn't there 1 million people still not provided the information yet, or it might be more?
Sorry, I was reading, I missed that, sorry, Graham.
Yeah, but how many people have still not put in their self-assessment applications?
It's quite a lot, yes, I know. It's yeah, I haven't got the exact number up, but about you on that one, Graham.
and you know, sort of the cost of a bookkeeper is not a lot, and for people to have that peace of mind. And you've got the silly QuickBooks advert where those tiny little people are talking to the person. You know, all they don't need all those QuickBook people, because people have to then spend time putting stuff in. Get yourself a bookkeeper, and which I have, and everything's fine. You don't then run your business. People running businesses aren't, you know, they aren't accountants. They didn't, you know, if they wanted to become a bookkeeper, they would become a bookkeeper, you know, but they want to design clothes or they want to sell buckets, you know, it doesn't matter, widgets. And I think, and the government has to understand that it's such a fantastic, bookkeepers and an accountant provide such a fantastic service. They are vital to UK PLC going forward. They really are.
Yeah, I agree with you there, Graham, because a lot of the stuff that I put in our consultation responses that ICB makes to HMRC on all these going around at the moment is that they still seem to assume in everything that's going forward that the individual is going to do this by themselves, and actually they're not. And I was talking to someone, and the thought, and members know my view on this, the thought of a piece of software for MTD that when you post a fixed asset comes up and says, oh, by the way, I can claim a capital allowance on this. It's part of my quarterly MTD for SAP. Do you want to claim that? You know, the thought of somebody claiming capital allowances when actually they shouldn't be doing it at all really terrifies the thought of me. So, yeah, your preaching is converted here, Graham, I tell you.
I know I am.
Can I just pick up, please? I think I've had a confirmation now of the SEISS grant is based on 4 years tax. And Lisa's very kindly put the link up. There was a tax blog, which actually I must have missed this morning because I usually get those. Iris, could you do me a favour? Lisa at the bottom of the chat list has put up a link to the tax agent's blog. Could you pop that up there for everyone so that they can copy it, please, Iris? Lisa's very kindly put that up and said the tax blog comes out today that says the value of the grant is based on an average of trading profits of up to 4 tax years. So they are not knocking off the first one, they're taking the full 4 tax years. So thanks for that, Lisa. And Suzanne says, well said, Graham, about the QuickBooks advert. This is what ICB, etc. should fight against and get this advert stopped, as the normal person does not know what they're doing, as we are constantly tidying up a client's mess. Yeah, I've got one at the moment. We've got a member, I'm not sure she's online this afternoon, who has just taken over the books from a client. And not only is she a bit unsure about what the client has done, she's also trying to sort out whether actually the instructions that the accountant has given them is correct as well. So we're trying to sort that one out at the moment. But Garry is Garry and I have had this conversation a number of times.
Yeah, I mean, we do get a lot of problems with the way that accountants look at things as opposed to our members. And I don't know what it is. I mean, if you look at the adverts for accountants, most, you know, a lot of them will say, I will save you your tax, I will save you tax, I will reduce your tax bill. Whereas bookkeepers say, I'll make sure you pay the right tax. And I think we're on the side of getting it right, black and white, and the government says this, so that's what must be done. And I almost think sometimes that accountants, it's almost inbred that they're there to do the best job for the client. And actually, you can't do both, because there will be times when, to keep the client happy, you can do something. And Jackie and I had a brief discussion this morning. I won't mention what it's about, but an accountant says one thing, our bookkeeper says the other, and we're now trying to get some sort of clarity as to which of them is correct. And it's not as simple as it sounds, but that happens such a lot of times. And, you know, a bookkeeper will throw their hands up and say, no, look, until I'm told otherwise, it's going in like this. And they'll get the sack, you know, and we say to them, unfortunately, there isn't anything else you can do. You can't bend the rules just because you think you're going to get the sack. And, you know, people do sometimes think bookkeepers are dispensable. If they don't give you the right answer, we'll get the bookkeeper that does. And I've got another member, one of our council members actually, that's just handed over a client. And she's been taken on by another bookkeeper who has gone in and appears not to be fully qualified. But the information she's giving out is just incredible, you know. Oh, you know, nobody will ever look. What sort of a phrase is that for a professional to use? You know, how's anybody ever going to find out? Well, hold on, you can't say that sort of stuff. There's another one actually, Graham. I'm sorry, I'm giving you the tough ones today as well, but I noticed that AAT have come out with a statement today saying that they think the accountancy profession should be regulated. It should be by qualification only. Everybody should be in there. Now, obviously, there is a lot of conjecture as to whether they should actually call themselves accountants. So do you think this is a way of getting agreement from government that they are accountants, or what?
Well, we've been in those meetings, Jackie, about who can call themselves an accountant legally.
Yeah.
They're accounting technicians. That's quite interesting, isn't it? They recently moved away from the fellow CCAB members who came together to join and form the accounting technicians. They're trying to reposition themselves. It'll be interesting to see if the government can go down that route. I think it's almost impossible to legislate for it now. I think unless it's going to have to be something that I think they are looking to actually do that, though, aren't they, Jackie? I thought they are seriously looking at it.
Yeah.
Firstly, they're going for tax advisors, I think.
Yeah.
The point about tax and advising, the fact that people who can give tax advice don't have to have insurance.
Well, that's come actually. That I think is being reconsidered. We've just seen there's a response just come out from one of the I think it might be in the tax avoidance, but I know they are considering looking at all anyone who's registered with HMRC having to have professional indemnity insurance, because that is going to level the playing field for everyone, rather than say that everyone who is a tax agent should belong to a professional body. which of course as professional bodies we all think they should be, but for whatever reason there are a lot who are not, and there are some very good tax agents out there who are not members of a professional body, but it covers 30% of the tax agent population. Now, if they've got professional indemnity insurance, at least it levels the playing field as far as, you know, that area is concerned, and
protects the consumer, as well.
Protects the consumer.
Yeah. Unfortunately, as soon as the insurance companies realise that it's obligatory across the board, they're going to put the fees up because nobody can say no. So I think that might affect our members in a way, which is a great shame. But
that is a no-win situation here, isn't it? Can I just pick up on a couple of questions before I miss them? Actually, this is from Anonymous, so I'm not sure who you are. A question about the VAT on ground rates for static holiday caravans. We charge 20% as usual and are being asked for refunds because our owners think it should be 5% as per the headlines applying for hospitality. Whoever you are, can I ask you possibly just to pop us an email on that one so that I can look into that and get back to you directly? And Peter, thank you. Peter's, I'm going to read this one out. Peter's put a lovely comment there saying, can I add, Jackie, that your budget analysis was far better than a panel of tax specialists from Krona I listened to yesterday. Thank you. Oh, thank you, Peter. That's very sweet of you.
Well done.
Right, the links there. I think we've covered most of the questions. There's a lot people put up, Andy and Sammy, there's put up a lot about marginal rate of tax and 26.5%. I'm afraid at 3:15 on a Friday afternoon, my head's not going to get around marginal rates of income tax. So we will look at this and get back to you. And I know that we will cover this next week. And also, Lisa, I will try and get the first page. You're asking for the first page of the presentation. I'll try and get that to you. I've got down who you are, Lisa. The slides will be up on the website. I will do a couple of updates to them based on today. I'll get them up to the marketing team and they will get them up so that you can download this or rewatch this because the Friday afternoon one, as you're aware, is open to everybody. So the slides will be available as well. So I'll get those off to the marketing team either today or first thing Monday, and they'll be put up for you to download.
Graham, we are getting very close to the PQ Awards, I gather. Are they a little bit later this year, or is it my imagination?
Yes, they are. No, they are. They're going to be happening at the very end of April this year. We normally have them in February.
I thought it was it.
Yeah, so we are just extending it a little bit. We were hoping, in truth, that we might be a little bit more open. A little did we know that was a long time ago. 6 months ago, we were hoping it wouldn't been as terrible as it has been. So yeah, but there is still, can I just say to everyone, March the 19th is the closing date for entries. There's some things I'd love to see on the shortlist. Something like ICB TV definitely deserves to be on the shortlist. You know, the work you've done.
Tell us what the awards are, because obviously not many of our people.
Well, there'll be Study Resource of the Year. There's Innovation of the Year. We're looking for PQs, and an ICB student can win PQ of the Year. Distance learning student, newly qualified is something it can't be. That's for you know, ICEW and ACCAs. I'm looking. There's Lecturer of the Year. So if anyone here is a lecturer, then we'd love to get entries from that. Accountancy Team of the Year. Now, if you work together in a team, we'd love to get an entry from, you know, a bookkeeping practice. That'd be fantastic. You've got a great chance of winning. We've got some great judges, one of which I think is certainly independent judge who is a Director of Education at ICB, which is Peter Stewart. So he'll be on the judging panel.
All right, I didn't know that. I have to say, I didn't know that.
He was a judge last year, and so he did a very good job. I don't get a vote, obviously. That protects me from, you know, sort of all the people who love to win an award. It's completely judged by 5 independent judges, and we will be making the announcement of the shortlist in probably early April. Anyone who's shortlisted will get a fantastic goodie bag, and we'll have the whole awards will be live online. So if you really want to enter, all you need to do is go to the website, which is www.pqmagazine.com, and go to, there's a little bar that says PQ Awards. Click on that and you'll see a nomination form come up. Click on the nomination form and enter. We'd love to get more entries from ICB members and students. It's great. You know, you're part of our community, And we'd
We're
love
sponsoring an award again, presumably.
Yeah, absolutely. And you're really, you're part of what we do. So we'd love to get some entries. I really do think the TV stuff that you do, the Monday. Now we've got Jacquie on a Tuesday, almost every Tuesday now, haven't you?
Every other Tuesday. I think I've got Verna coming on with me on Tuesday from HMRC. So
yeah, we were in the meeting with her, weren't we? Last week. We're both on HMRC's.
Yeah, she's coming on. We're talking about tax agents and the whole process of applying and how the tax agent system works on Tuesday. So I'm looking forward to that.
And they make some quite good improvements. And the HMRC are it's really interesting to see how much money the Chancellor put into HMRC recently, actually. That was quite one of the things that was noteworthy, really, was how much money because the whole, as you said earlier, Gary, the whole digitalisation is going to be key. And how they work that with people's bank statements and everything else, it's going to be really interesting moving forward. But that means even more so that people need a bookkeeper to make sure that what they have and the information they have is the actual right information as well. But anyway, so that's me digressing. Please do enter the PQ Awards. We'd love to get.
No, that's okay. You digress away there. This morning, I came directly here from a meeting that we've had with our branch chairs. Our branch chairs overnight switched from live meet in a hotel somewhere to Zoom. It's absolutely gone through the roof. We've got so much more interaction. And a lot of it is because of our market. If you think that the majority of our members are mumpreneurs and they've got a couple of kids and they're now homeschooling and various other things, there's difficulties. But of course, if they're expected to go out to a branch meeting on a cold Monday night when it's raining, they've probably got better ideas. They look outside and they think, oh, no, I won't bother this time. So now that they've got more access, some run at different times of days, etc. Numbers have gone up, number of people registering has gone up, number of people going to at least one branch meeting has gone. We've got one lady, I think, has gone to about 28 or 29 different branches. So, you're not restricted by county boundaries. But at the same time, everybody was very keen to say that the local branches have still got that local feel. So what's going on. If you've got people there around you, you can talk about particular parts of your county or your town, etc. That works well. But it was one of the most, we do it every year. We're a little bit late. I think we normally do that in February. We're just about tripped into March. But I have to say, it's the most positive branch chair meeting I've ever been to. I mean, I'm not suggesting it's because they can't get at you quite as easily when they're on Zoom, but no. Very, very, very positive. And we've got a few of our branch chairs who are actually also on our advisory council. So there's quite we have a very close network here, and everybody was I think just very pleased with the way things have gone, and I think they've done a lot. They feel happy that they've served their clients properly. I think they're happy. I'm pleased to say that ICB has been there for them. Like you said, Jacquie, at least, I mean, most of this stuff that Jacquie's got, we know can be found from all sorts of different sources. Why bother looking at several sources when actually you can come together and get it here? That's good. And we are actually going to be doing a lot more with ICB TV over the next couple of months. Some quite radical things. So everybody watch this space. I'm going to avoid my normal trick and tell you what it's going to be, because otherwise, one, you'll hold me to it. Two, everybody else will copy it. But yeah, I'm really pleased. I mean, I've always thought that ICB has been there for the members and has been there for the profession and the small businesses that they serve. But I think they and us have sort of gone an extra mile this year. I like to think so. And so, yeah, anyway.
Couple of quick comments, Gary, that have come in, if I could just raise them. One quick question. Mehul is saying, when would the SAT exam for 2021 be available? It normally comes out somewhere around the summer, because once we get past the 6th of April and we can start working on what the tax returns are going to be. So I would imagine sometime around the summer, but I don't have a date. And actually, it's an interesting one from Stephen. Stephen says he's watched these on YouTube as recordings, but it's the first time he's tuned in live. And he's finding it much more enjoyable watching us live. I'm sure it's because we've got Graham with us this afternoon.
No, it's not. No, I promise you it's not that at all. I actually reviewed a book for PQ this month called Go Live. It's a really fantastic. It's written by an American, but it's about the importance of getting a feeling. If we're all doing getting a feeling of if something's live, it is more fun. More people are more engaged. It's a bit like when you did your summit. You know that it worked. It worked because it was all live. And you got 1,000. I was really impressed with that. You got 1,000 people coming to the summit, which you wouldn't have got if it was in a Heathrow hotel, would you, Garry? I mean, that it was.
No. It was, and everybody really enjoyed it. And the thing was, everything was left online for 3 months, or whatever it was, right up to the last day. We got more than 100 people going on and looking at it. So, you know, they must have been looking at it again, or some people bought in just to get it afterwards rather than go to the real event. Yeah, I mean, it's a library. Basically, that's what it's all about. The knowledge that you get today, you may not need today, but then in 3 months' time, you think, "No, hold on a minute, I got that from somewhere. Where is that?" And I know that we've got, you know, we get a lot of people watching us on YouTube and also on Facebook. But if you go back and look at the very early episodes, those numbers are still slowly creeping up. You know, people are still referring back to it. And I think that's brilliant, you know. Yeah, it gives me a nice warm glow to think we're doing something good, which is fantastic.
I also think, Garry, for me personally, that the highlight, apart from the presentation, the highlight actually were those little lounges that you could go and sit in a little chair, visual representation, particularly for students and for new members who are perhaps too scared to go to a live thing, could just literally go into a room and sit in a chair and you pop up on the screen. You don't even have to have your camera on and you can talk to people. And I found that they were so interesting. I know Sujay and I kept bumping into each other in those rooms because we both found them absolutely fascinating. Graham, there's one question coming from Lisa and I know the answer to this. What does a P&Q stand for in PQ magazine, please?
Part qualified. It's as simple as that, really. And if you look for jobs, if you go onto the job market, if you go on jobs board like Gap Web or somewhere like that, you'll see, or Hayes, you'll see it's just something that people ask for. They look a part qualified accountant is what they are.
Yeah, and I have to say also,
I'm sure Graham won't mind me saying this, but we go to his awards on every year, and he always has a comedian that ranges from pale blue to dark blue, but nonetheless, he sort of sits in the wings there, cringing what they're going to say. But I remember one year, this guy said, "This is the first time I've ever come across a publication that celebrates only being part qualified," you know, and everybody roared with laughter. And it does seem to be that, but it is a stepping point. I mean, a lot of people do go on, but the importance of getting partly there is there. They need an encouragement because normally it's a long qualification. It's drawn out over lots of years and lots of work. But also those people who are part qualified might by then have changed their whole lifestyle or their needs, or just looked at life completely differently since they left college or school or whatever it is. And yeah, Graham helps them find an alternative route. And one of those alternative routes is us. There are others as well. But so, you know, this is, I think we collect somewhere in the region of about 20 to 30 people a month who have a change of heart. And that doesn't mean there's anything wrong with them. And it doesn't mean that one day, I don't know, they might go and do it. But at this moment in time, at this stage in their life and their career, it's not quite what they thought it was going to be. But they've got so much knowledge, rather than waste it, let's just realign it and go into bookkeeping, you know.
Oh, it's interesting. Richard says, I miss the hard copy PQs.
Yeah, so do I. Sorry about that.
For those of you who haven't come across PQ magazine, there is an awful lot in there, obviously, that leads towards exams and the professional bodies and things that take the exams. But they do have some fascinatingly useful articles in there as well on all sorts of things, which cover a lot of what we do. So, so that's that. And Garry, question from Stephen. Where did the ICB tea bags come from, please? They were nice and strong. Now that's going back to Summit. The ICB, we had tea bags, didn't we, in the Summit?
Yeah, we did. I will find out and we'll post it somewhere for you. That will come from our marketing team. I'll check with Amy. Yeah, she's busy getting the goodie bags ready for Monday for the International Women's Day, because that's sold like hotcakes as well.
Yeah.
So yeah, doing that, but I'll try and find out where they came from. I got my goodie bag as well for conference, and there was a lot of good stuff in there, wasn't there? I really enjoyed that.
I've got my zero socks on today, actually, Garry, because it's cold here. So I've got my zero socks on today.
Yeah.
Anyone who
Yeah,
knows
no.
what the zero, I mean by zero socks.
Yeah, no, that was great. There was something else I was going to mention, and I forgot. Oh yeah, just blowing our trumpet a little bit, I have to say. So please excuse me here. But what a lot was going on at conference, and I do my normal bit and then leave everybody to it. What I hadn't realised was that we were contacted shortly before the conference by one of our members who is profoundly deaf. She was saying because of the technical articles and presentations that were going forward, Google doesn't cut any ice, the translation. And Amy, Iris, and Alex, and I'm just wondering whether it was also Sobi. So
I think
I'll
Sobi as
include
well.
her.
Sobi as well.
Yeah, sat and wrote out every single word, and it went up on the screen for this lady. I mean, they were brilliant, absolutely brilliant.
Yeah.
Anyway,
yeah, that was pretty good.
so I'm not blowing our trumpet really, but just theirs. I mean,
Yeah,
fancy
Iris
doing
has
that.
said, yes, Sobi was doing it too. Iris has just put up.
Sobi was doing it as well.
I know, because she contacted me because there were a couple of words that were a bit fuzzy on one of my recordings that she contacted me to see what they were, so she could put it up.
Yeah. Anyway, so yeah, we can occasionally clap up. Well, not me on that, but everybody else. So
They're an amazing team.
Yeah. We go the extra length at this place, as Graham knows.
Susan Brunner's just said that's why ICB is amazing. You're also dedicated. So thank you for that, Susan. I think actually, Gary, that's all of the questions we've been through. I will get them all sent to me. So if there's anything we haven't covered today, I'll get out to you. I'll get the COVID hub updated with everything as soon as I can. We'll get this, the slides up as soon as we can. And take it from there. So
great. Anything last minute from you, Graham? Anything that you wanted to say? It was very nice of you to come on. I know that you, like me, are suffering a little bit, but Jacquie says it all. We don't get much to say, really.
Yeah, no,
but, that's fine. She knows what she's doing.
Everyone needs a Jacquie. Everyone needs a Jacquie.
Yeah, they do. That's it.
I have to say, in the staff meeting, I forgot to unmute myself, and someone on the staff team said, "We can't hear you, Jacquie," and I said, "Well, that's a first."
Yeah, well,
no comment. No comment.
Very much.
No, I had all my notes, and Jacquie covered everything, so I was ready to step in.
It's always the problem, isn't it? You go to a conference, and you're second speaker in, and somebody comes up, and then I remember we did your do that you have at the South Bank University.
Yeah, we just had that. Yeah, big conference.
Yeah, I did it one year, and I did it with Tony Magratelli. And I went on and did my bit, and he came on, he said, well, actually, Gary said everything I want to say, so can I answer any questions? And that was about the end of the day, which is great. So you should always be first on, I suppose.
Yeah.
Lots of thank yous there, so that's lovely. It's nice to know that you like what we're doing, obviously, and that's why we do it. But we've been doing it long enough for today. I know you have other jobs to do, and your tea will be finished by now, and those biscuits that you have when you're listening to us. So again, thank you to you both, my co-panelers this morning, this afternoon. I hope you all have a great afternoon and a good week next week. We will obviously still be here next week. If you're going to have your jab, good luck with that. It's great, and it's very well organized. It goes like clockwork, and you feel fantastic when you come out, because you think, I'm that much closer to being at least free of the biggest part of the problem. So please, if you get the offer, take it up. And just a slight hint, one thing I found, I sort of thought I'd get a letter through the post, but I went onto the web to find out whether I was eligible, and I was able to apply immediately. So I didn't need to wait for a letter. The letter's just come through recently. So if you fall into one of the brackets, then go for it. The least it can say is you're not eligible, which I think it did once. And then the second time I went in, it said, all right, you're an old fogey, we'll let you in now. So that was it. That was great. And I went a couple of miles down the road here, and there are so many people directing you, and as long as you don't mind answering your age, date of birth 4 times in a row, just so they get the right person, then it's great. So, great. Nice to see you all. Thank Furlough. It's another Friday gone, and we'll see you next week. Thank you, everybody. Bye.
Thank you. Bye, everyone.
Bye.